I just want to make a correction before I get into this video. At the beginning of this trade recap, you'll hear me mention that I lost $1,492, but that's incorrect. That was the amount I lost in a trade recap a couple days ago. The amount I lost for this video was $1,215. So when you hear me mention that I lost 1,492, just disregard, and it's 1,215. Okay, this is how I lost $1,492 day trading ES on April 1st. What day even was that? Wednesday. So I lost $1,492 day trading ES on Wednesday. So coming into the day, what price action was shown as actually was we retraced. This is our daily chart here. On the daily, on both indexes, this is ES and let me go to June or NQ. We retrace down into this gap / the zone where all-time highs were. And then out of this, we get a strong reaction out of it on the daily on both indexes here. You see this is a good retracement zone for both indexes. This is an area what I really liked to see price come into. You know, we've got previous all-time highs over in here. We've got this fair value gap. We come into it, and then boom, we get a nice reaction out of it. So with that being said, I was not surprised by this strong move up on the 31st and into the morning session of April 1st. So obviously here I thought we were super extended on the 4 hour. If I drop down here to the hourly, my initial thoughts were if I get to our, what is this? This is our 9 o'clock candle. 9 o'clock candle. What we have is on this 9 o'clock candle, there was a news event or something of the sort that caused a massive spike in price action. That came up, caused us to sweep out these hourly highs really on both indexes. NQ barely took out these highs. This is 242.5. This is 246. So we came up, sweep out these hourly highs, and we start getting rotations or retracements on the hourly. And this is, I suppose, where I'm mistaken because I took this trade short prior to a hour or 4 hour disrespect of bullish order flow. I thought coming into this session, this looks like a high resistance draw on liquidity for the day. Let me drop down here to the 15-minute. I'll show you what I'm talking about. So you see this candle at 8:45 is abnormally large, even for the 15-minute. We come up, sweep at this price. Let me drop down here to the 15-minute. So what we have is this is our 9 o'clock candle. This is our 9 o'clock candle on both indexes. What we have is the 8:45 spike comes up, sweeps out this hour liquidity to the left. To me, with how far down prices come prior to market open, this is our 9 o'clock candle close. Paired with the fact that we have hourly London session low, hourly level here, hourly Asia session low, this hourly low here, which obviously we're on the 15-minute chart. But I mean, we get a break of structure on the 15-minute down. We get a break of structure, inverse this gap on the 15-minute. Let me get to market open. This is 9:45. So at even though we come down this far in price towards London session low, and even up close to market open, we put in relatively equal lows right before market open. To me, my initial thoughts were if we get some sort of retrace and respect this 15-minute inverse gap on the indexes, I'll be willing to take a short and essentially take this continuation trade on the 15-minute, but a retracement on the hourly / 4 hour to take out these hourly liquidity levels to then move us higher up. But this AM session sweep of London session and these hourly liquidity levels to the left look like high resistance to me coming into the day. Paired with the fact that we break structure to the downside on the 15-minute, respect this inverse gap, and we have all more liquidity levels to draw on the, draws on liquidity to go short. I was willing to take a short, and I did take a short. I marked out a 50% equilibrium on the 4 hour because I was willing to let this run on a retracement play because of how extended we were. But this is on me because, once again, this is just a retracement. This break of structure to the downside on the 15-minute is a retracement on the hourly and on the 4 hour, even though I thought we had room to retrace much further. Let me pull up our 5-minute chart here. Show you what I mean. So let me pull over here on 1 minute. What we have is this is our market open. We get this 15-minute retrace, but what we end up doing is respecting this gap. And what we actually end up doing is inversing this gap on the 5. This is a 5-minute gap here. As you can see, I'm gonna mark this orange. $9.50, we inverse this gap on the 5-minute to go short. So at this point, we get a retrace, we get a break of structure to fit downside on the 15-minute, put in relatively equal lows line in session, get a retrace on the 15-minute while still respecting this 15-minute inverse gap because it wicks out. We get a 5-minute gap that's inverse short on a retrace into this 5-minute gap. I'm looking for a 1-minute break of structure to the downside or 1-minute confirmation that we're going to continue short. And what do we have? This is our 5-minute inverse gap. What we do is we get a retrace, but we never end up disrespecting. Oh, we do. We broke 1-minute structure right here. This is a high. That's execution error on my part. Yeah, it truly is. I did not know that these were opposite colored candles. I thought we came up. I thought this was our high because we never broke, closed above it. We get a bearish reaction down. I entered right here because I thought we never broke 1-minute structure to the upside, and we're still respecting this 1-minute gap. I did not know we broke 1-minute structure to the upside. And then after that, let me see where I entered. I entered in here, set stops up here on the potential that we come up, test, fill this 1-minute gap, or even poke above it a little bit. I did not want to get it exact ticked. I'm trying to see this here. We never broke 1-minute structure to the downside after breaking it up here. We come up, we close above this inversion on the 5-minute, so then we'd need a disrespect on the 5-minute. Even though we broke 1-minute structure down here, we never held this inversed gap on the 5-minute, so that doesn't really matter. Did we ever break structure to the downside on the 5-minute? No, we just have all these wick outs. So yeah, this was an execution error on me. It sure was. I ended up getting stopped out, and then I thought price was going to run, and I was going to be pissed. But I ended up just being wrong on the day. We inverse this gap on the 5-minute. Let me get rid of this. Inverse this gap on the 5-minute, get a retrace. But on this retrace, this is our 5-minute inversion gap. On this retrace, we never broke 1-minute structure to the downside before closing above this inversion here on this candle. Yeah, that's execution error on me. I didn't know we broke structure on the 1-minute up to the upside here. My timers must have been off my chart in my PC. I must have not synced my time. Wow, that's unfortunate, but nothing I can complain about now. But let me pull up NQ's 1-minute and show you more so why. And this is not me sitting here trying to justify my trades because I took what I took. I know it ended up being execution error by looking at it just now, but I'm just messing around on the same account with NQ here. But what we end up getting is a SMT where NQ comes up, sweeps out this high, whereas ES is down here. And I thought that once I got stopped out, and once we put in this 5-minute SMT, I thought then ES was going to absolutely run to the downside. That would have been super frustrating, but that's not what ended up happening. Even though, if we look on the, let me get my chart back over here. If we end up looking on the higher time frame into the next day, we do end up getting that retrace into these on the same day, just later into Asia session, which is unfortunate, but we ended up just barely poking above the high that was formed at 8:45 on the 9 o'clock candle, and we broke structure to the downside. But this one was a execution error on my part. I will admit that we inverse this 5-minute gap, got 1-minute break of structure up. I needed 1-minute break of structure, 1-minute disrespect of price on the 1-minute to the downside. We never got that because we never got any 1-minute. Even though we respected this 1-minute gap, we never got a 1-minute disrespect or a 1-minute inversion and 1-minute break of structure to the downside. So that is a execution error on my part. I thought these were great draws on liquidity, but I failed to recognize what price was showing today. This was Wednesday's trade recap, and thank you.